Hello everyone, welcome all of you to next module on public revenue, which is a continuation in the theory of international trade and public finance. Myself, Namrata Kishnani, Assistant Professor from the Department of Management, Bhopal School of Social Sciences. Let's proceed. Today, we are going to talk about what is public revenue and understand the different sources of public revenue and the categories of public revenue. According to Professor Delton, public finance is concerned with the income and expenditure of public authorities and with the adjustment of one with the other. Thus, the subject matter of public finance includes public revenue, public expenditure and public debt and their impact on the economy. Thus, it becomes imperative for us to understand that what is this public revenue, what are the different sources and components of public revenue in order to carry out the several planned and unplanned expenditures of the government during the course of year and of course during long term. For socio-economic welfare programs, the government always relies upon the source of public revenue so that it doesn't have to rely more on the public debt or the borrowings. Public revenue refers to the income of the government, central, state or the local government from different sources. Delton, in his Principles of Public Finance, mentioned two kinds of public revenue. Public revenue includes all the income of the government received from formal sources. On the other hand, the public receipts include income from taxes and goods and services of public enterprises, revenue from administrative services such as fees, fines, gifts and grants. As we know that for making Aadhaar card or either passport or driving license, we have to pay the fees. The various gifts and grants which are received by the government, that is on the visits to various countries and so on. Then of course the fines that is imposed by the government as a penalty. So all these are the different sources of public revenue apart from the taxes that we pay. So let's move on. The government derives revenue in different ways from the public. Generally, the tax revenue and the non-tax revenue is the basic component that is of the different sources of the public revenue. The tax can be divided into direct taxes and the indirect taxes. The tax revenue is the income gained by the government through taxation as a compulsory contribution of the wealth of a person. That is to say, it involves a sacrifice on the part of the contributor. That is, we are making a contribution towards the government treasury. Taxes are a compulsory payment to the government without expecting any direct benefit or return by the taxpayer. That means it involves the principle of quid pro, which is to explain that when we are giving any of the taxes, there will not be any direct benefit given to the taxpayer, but that welfare will be transmitted to any other section of the society which is requiring the benefit of the tax. So, the direct taxes is a tax imposed and collected directly from the person on whom it is legally imposed. It cannot be transferred to any other person, it cannot be shifted to any other person. That means I have to pay my own tax, I cannot shift my tax to my own husband or to my father. So, the direct taxes include income taxes, wealth tax, corporate tax, capital gain tax, that is I earn on my shares, securities, bonds and debentures, or any gift tax, that is on the wealth that I acquire, the estate duty, that is on the property I acquire. So all these things are the direct taxes. Now, as we say, the direct taxes have of course a lot of merits and advantages for the government. First being equity, because it is going to create that differentiation in the society that those people who are having huge sums of money with them and the property, they are being charged with the taxes. Then the certainty of the tax, of course, because the government can pre-assume that who are belonging to that particular section of the society that have to pay the tax and who are going to contribute in the welfare of the government. Then the elasticity, because the tax slabs are changed every year as per the requirement or the budget that is being framed looking at the foreseen expenditure by the government. Next, it includes economy, because there is not a lot of expenditure or the administrative works that are have to be maintained by the government, basically to collect the taxes or to the compile the thing or process the thing. Then of course it reduces the inequality, because those people who are from that wealthy class of society, they are being taxed basically because they are enjoying the luxuries. That is the reason, as it is going to create that society with power. Okay. So moving forward, the demerits of the direct taxes. However, as we say that the direct taxes are paid by the wealthier class of the society, but nobody likes to pay the tax. It is of course a pain point to pay the tax. So it is of course unpopular mechanism. It is inconvenient, as the government of course have to create a separate cell and have to process the tax of each and every individual and the corporate separately, and it takes a lot of amount of time, and of course the expenses and the administration of all those things. Then it is of course injustice to the people who have worked hard and acquired that sums of money, that only those people should be taxed, not the others. Then it is of course having a lot of possibility of evasion, because every individual who is paying the tax is of course paying from their hard-earned money, and it is a pain point for the person who is earning a sum of money for himself and sacrificing that sum of money for some other class of people or some other section of people. So it is always having a possibility of evasion. It is again a disincentive to work and save, because people like to spend more, consume more instead of paying the taxes. So they try to enjoy more and more luxuries instead of paying the tax to the government, and that tax being used for welfare of some other class or the marginalized classes, as we say. Moving forward, we come to indirect taxes. According to Dalton, an indirect tax is imposed on a person but paid partly or wholly by other, owing to a consequent change in terms of same contract or bargain between them. To simplify the same, we can say that indirect tax is one on which the impact and the incidence are on a different person. That means the tax is shifted to some other person. When I pay for any of the goods that I purchase in any of the shop, the tax is paid by the consumer, that is me, not by the shopkeeper. But who is going to deposit the tax to the government? The shopkeeper. That means the tax is shifted to the consumer, which was imposed on the shopkeeper. That is, the impact of tax falls on businessmen and the incidence of tax falls on the consumer. The popular indirect taxes that we pay is GST, value added tax, custom duty, professional taxes, entertainment tax whenever we go to any of the hotels or any of the multiplexes to enjoy a movie, municipal taxes, and so on. So let's begin with the merits of indirect taxes. As we know, the indirect taxes are much more convenient to collect by the government, as it is paid by the shopkeepers, the retailers, the wholesalers, not by the individual customers approaching the government department to pay the taxes. So it does take less time by the government to process the taxes. Next, it is equitable, as it doesn't differentiate between the different classes of people, but all those people who are consuming any of the resources, whether it is essentials or it is the luxuries, they pay the tax as per the category of the resource. Next, it is having much more wider coverage, as everybody who is a consumer has to pay a tax. So mostly the entire population comes into the tax bracket. Next, it is less possibility to evade, as the taxes are paid by the consumer and it is directly reflected into the bills, that is the invoice that is being generated, the shopkeepers and the wholesalers. It's a chain of the people who are going to pay the tax. So evasion of tax is very difficult. It is much more progressive, as the taxes are charged as per the category of the resource. That is, if the essentials are there, let's say for example the medical the supplies, or when we talk about the other grocery essentials like salt and so, they are being taxed less. But those items like electronics, mobiles, gadgets, or when we call the smart televisions, when we talk about cars, or when we talk about gold, the taxes become higher and higher. So those people who are enjoying the luxuries in their life, and those who have the resources with them, larger resources with them, they have to pay the higher taxes. Those people who are purchasing the essentials, those pay less taxes. Now it is also elastic, as it is can be changed frequently as per the resource, and also according to the demand and supply of the items or the commodities, also as the the monetary policy or the budgetary policy or the plan of the government. Next, we come to the demerits of indirect taxes. As we say, the indirect taxes are little regressive in nature, as everybody comes into the tax bracket. So a person who is from the marginalized class, who is paying for the same let's say the oil bottle or that soap of Lux or Lifebuoy, whether it is the person who is having an income of rupees 5,000 a month or 50,000 a month, both have to pay the same tax. So it is discouraging those people from the marginalized section of the society. It is again uncertain, because the government cannot predict in advance that how much tax will be collected. It discourages the savings among the people, because again everybody will be taxed, and according to their consumption and according to their amount of resources that they are using. So the people tend not to save but to consume, that is, instead of paying taxes for the benefit of some other class of society. Next, it is inflationary, as the taxes are imposed upon the basic price of a commodity. It increases the price of the commodity for the consumer. So many of the people who are not able to avail the resource because of an increased price, they leave the consumption of the commodity, or they postpone the consumption or the buying of the commodity. It again has a high cost of collection, again, because when we are talking about the recently imposed GST, the GST has to be filed quarterly, and it takes a lot of time in checking and rechecking and processing of the GST forms of so many of the retailers and shopkeepers and wholesalers in a pan-India basis, and again the rebates that are given. So it is of course not very lucrative to the people also, and of course for the government administrative mechanism, it's also having a high cost. Then it is again having no civic consciousness, because when people are consuming the commodities, they see the price of the commodity collectively, not the tax which are imposed upon it, or how much tax that I am paying for consuming a particular commodity. So it doesn't give create a consciousness amongst the consumers that which commodity they should avoid consuming, as they are paying a huge tax upon it, or it is not eco-sensitive, or it is not beneficial or having a welfare component basically in an economy. So next come to the non-tax revenue, that is the various sources of the non-tax revenue for the government. So it is all the recurring income that is earned by the government from sources other than the taxes. It arises on account of administrative function of the government, and they are classified under the administrative revenue, the commercial revenue, and the grants and gifts received by the government. They are most popularly the interest, dividend, profits, fees, fines and penalties, external grants received by the government. So the non-taxes revenue can be summarized into the fees, that is, as I told before, the fees that is paid to the the various government departments for let's say issuance of driving license or the renew of the driving license, the passports, or else. The fines and the penalties that is being given collected by the government or imposed by the government on any of the errors being committed by the citizens. S-sheets, that is a popular mechanism basically used by the government. Surplus of public undertakings like BHL, NTPC, SAIL India, GAIL India, all these public undertakings who are able to make profits, that surplus goes to the government treasury. The gifts and grants which are being given by the various countries, their embassies and consulates, or their diplomats visiting India, or our diplomats visiting other countries. And lastly, the borrowings of the government, which is from other countries or the other international agencies. So with this, let's come to an end with the topic of the public revenue.